It's Sunday, April 6, 2014. Current time is 15:48 GMT. Um, we finally got a nice weather in the Northeast, finally, a spring day, and Northeast US that is, and I'm going out hiking in a little while. So before I do, it's been on my mind after Friday, and I want to point out some key levels and what we can look for next week and into the week ahead and what's going on in equities is that seems to be driving the risk sentiment. So bear with me as I go on here, but let's just first talk about what's going on in the equity market because that's setting the risk tone and the tone for bonds and the tone for dollar yen and the yen crosses and it's all one big correlation. Um, after the non-farm payroll, which was not a bad number, it was not a great number, but after the weak data first 2 months, everybody expected a big snapback. It was below the whisper expectations. But why did the market sell off? And if you read what's going on, it seems that the high flyers have been coming down for some time, and the and we've seen mostly probably we haven't seen it in the averages, but we've seen it in individual stocks. Some of them were like Facebook. I think it was off. It's up 3.8% in the year, but I think it's off over 23% from its high. Tesla, Netflix. We've seen some big moves in stocks, and I think what's happened is you can make one of three cases. They just got carried away in the upside, and some of the froth is coming out. That's number one. Number two, maybe they reflect an economy that's not going to grow as fast. It's going to grow, but not as fast as the market expects. That could be possibly two. And three, maybe the effect of tapering and the fact that with liquidity coming out of the market, and any way you look at it, the Fed takes $1 trillion out, has to have some impact. That it's being felt in the high speculative and the high flyer type equities, where the fast money has been running in the excess liquidity. If that's the case, and you got to watch out for emerging markets as well, because they've been very speculative as well, and subject to, any concerns that growth will not be as great as it can, or mainly probably more concerned about liquidity. So let's put it one of three ways. The last one's probably more significant if it's tapering, because if that's the case, then, as I said, it has impacts beyond just high flyer stocks, has an impact on emerging markets and what becomes a safe haven after that. So that's where we stand coming into this week. We're coming in watching. We're going to be watching the Nikkei to start the week, given the correlation with the yen. And if you look at dollar yen, we did a breakout here above 103.75. Tried it for 3 days, but we couldn't hold it, and then we came down. And if you look at this cluster of moving averages in the 102s. You got the 50, the 20, and the 100. That seems to be where your risks might lie. It would be 103. Looks like 102.30 to 70, or 102.50 is the midpoint. Dollar yen moving up is logical after the turn of the quarter, but let's see now what happens on Monday, because the market's going to be hypersensitive, perhaps to what goes on in the Nikkei, and we'll see if there are stops to be run. Then maybe they'll be running dollar yen. Still should have a limit on its downside, but in these type of markets, you just have to beware. And the fact is, dollar yen is still down on the year, despite the fact that everybody thinks it's going higher. So that, and the same for euro yen as well, which closed, I think, dollar yen close to year above 105, and euro yen close to 145. So they're both off, a decent amount since the start of the year, despite the fact that they, especially dollar yen, it's been trading with a better bid once it got above 102.50. So I'd say 102.50 on the midpoint of those moving average ranges is key on the downside. But at 103 is going to set its tone, and that's what it is coming into Monday. And I'm going to discuss later. If you hang in a second, I'm going to discuss later on in the month, but it's very clear to me as well. And I'll discuss it maybe here. If you look at the euro dollar, we've moved into probably a downtrend, but we have not established below the 100-day moving average, which on Friday was, I haven't looked at it today, but it's probably around 136.90, I guess. So you'd have to reestablish below it and then get to 136.40 to really accelerate this downside. On the upside, key level here is not until 138, around 16 or so. So you got room on on the upside if it decides to correct, but it would have to get above one 137.40.50 if you want to see 138 get into play again. The downside, you got support here at 136.40, probably 136.40 to say 75 or so. And those are your parameters. So it's really almost like 136.50 to 137.50. If that's the case, 137 is going to set the tone, and that's the way euro dollar has been trading. It's been trading around a big figure. Then you have there's still rumblings in the Ukraine. You got U.S. sending ships to to Japan, with some more North Korean rumblings. So you got some political factors, but markets has been trading on those. Really, any significant thing, it's really the stocks are going to determine this week. There's very little data coming out. Fed minutes are going to be watched closely, but I don't think there'll be any smoking gun there to tell us anything different. But that's going to be the week. So you have to watch dollar yen to start the week more than the euro dollar. But if you look down the road, and this is quite significant, everybody's been talking about deflation in the eurozone and whether the ECB is going to react if it is we see deflation. Stay, or low inflation stay longer, or disinflation, whatever you want to call it, longer than you expect. They expect, and maybe the most unconventional measures might be employed. If not, so far it's just talk. And in this regard, the key day probably for the euro dollar this month is going to be around the last day of the month when the flash PMI for April comes out. Flash hiccup, HICP, which is CPI, I'm sorry, not PMI, comes out. And that's really the key indicator for the entire month, because they say last month was depressed by base effects from the prior year. When they come off, expectations are that inflation will at least tick up a little bit, and if it ticks up, markets can assume the ECB is not going to do anything. So that is your key date, your key indicator this month. It's got a whole month to come, so just put it on your blotter. What happens in between is kind of going to be like a crapshoot, but the way the euro dollar has been trading, you just can't count on it following through. But if we do get below 136.40, we're going to accelerate down into the 135s. If it gets back up 137.50, then maybe we get 138 in play. Still feels like the top is in for the year above 139. But maybe the new range will be 135 to 138 rather than 137, 140. That's the way I'm thinking right now. Still favor selling blips, but market short, there's always the possibility of a squeeze. But I think we watch the yen to start the week, and as I said, mark that date for the Eurozone CPI. Otherwise, very quiet week this week data-wise, so we're going to have to watch stocks. Bonds, everybody's going to watch stocks, all about, and including the bond market, the Forex market, and so forth. So that's it for now. That's my thoughts on a beautiful Sunday here, and we'll touch base. Also, just look at the link at the bottom of this video. You're going to see a very, you want to get some really good insights, just click on it, and you'll see what I mean, okay? Take care. Have a good weekend and a week ahead.